Hey everyone, in today's video, we're just going to do a bit of a channel review, what happened here on the channel in 2023, and then I'm going to go through my portfolio in Wealthica and in Passiv and give you some a bird's eye view that maybe I just haven't shown before. I've shown parts of my portfolio, but not like I'm going to detail it here. I'm going to talk about goals for 2024 and beyond, so short term and long term. And this will be my last video of 2023. And then we'll just kick off the new year on January 1st with something that is a little bit of a tease, but something I've been working on for a couple months. And it's something I think will add value, absolute value to this community. So stay tuned for that video to come shortly in regards to that. So here in 2023, I launched CoveredCall ETF investing. Started to make the transition from just a regular dividend portfolio over into cover calls back in February of 2022, but it was a slow transition. I would say for most of 2022, classify myself as a hybrid investor for most of that year. But here in 2023, an outright income investor this entire year. What a journey it's been so far, and I can't wait to share some of the results of that from the year that's passed. But if you guys are interested, one thing that you can do if you don't know already, haven't subbed, or you have, but you're not aware of this, head over to the community tab, and what you're going to find over there is something I like to post every Saturday morning are these weekly portfolio performance posts. So as of the recording of this video, I'm on to post number 4. And as you can see here, I just want to detail my portfolio performance, not just in videos, like I'm going to talk about that in much more broad detail, but just on a week by week basis. So you can actually go through this community feed and see for yourselves like what total I'm at and what my total return is. So let's just say for the weekly portfolio post in week 1, right here up here is just the year-to-date price action of both my portfolios in the RRSP and the TFSA. And then down below here is the total return. So that's price and dividends reinvested. I reinvest 100% of everything that I receive on a monthly basis. And then you can just see the that year-to-date performance. So you can see in week 1, this is where I was at against the S&P 500. We can see the total value of my portfolios was 152 and change. By week 2, it started to climb a little bit higher. I included more indexes just to give some context versus the TSX, which is of course the broad market Canadian index, the Dow Jones Industrial, my portfolios, and of course the S&P 500. So this will give you guys a really easy way just to go through the feed and see the results for yourself. I've been getting, as I put in these posts, a lot of questions about NAV erosion and the fact that, or capital erosion, whatever you want to call it. And I thought this would just be a good way just to show people, like, well, if that happens, you're going to see it here on a week by week basis. So check these posts out. I also include other things like just income news and any trades that I've made throughout the week, or maybe something that's on my mind, something that's changed in my portfolio, and I just post it here every Saturday. Maybe it's something that doesn't necessarily make it into a video, but it will be here. So stay tuned for that. And of course, every month I'm also going to be doing these income report posts where it just shows you the month over month how much my dividends have accrued over time. And I'll probably do it year over year. So February 2024 will match up with February 2023. So you can see all the totals here. You can see for 2023, total income earned was like $14,708. This is actually growing like crazy. I want to say 2021, my first full year of investing was maybe $1,400. And then 2022 was just a hair under $7,000, and it's doubled from there. I'm projected, I think at this point, to hit $20,000 next year. So it just goes to show you these compounding effects are, man, it's totally real. I forget who it was. Was it Einstein who said compounding is the 8th wonder of the world? I believe it was him. But if not, then it's still a great quote, no matter who it came from. Okay, so that's it for the channel. We can see I've posted 43 videos in 2023 and 1,300 and I guess 10 subscribers at this point. So thank you guys for tuning in. I just also want to make that clear that you guys have been awesome and participating, commenting, liking the videos. It shows up in my analytics. You guys, even if you don't do any of that stuff, I can still see you guys are coming back and watching in pretty significant ways. Let's move on to Wealthica, and I'll show you guys actually where okay, we're not going to go here. Let's start over at Wealthica 360. This is something I've never shown you guys before, is where I actually started the year at. So let's go through that. Where did I start at the beginning? Basically, it was January 9th when I joined Wealthica, so it extracts data only from that point. But you can see here, I started at 109,000. And as I contributed and reinvested dividends, and as tax returns came in and other money came in, it's made its way up from whatever that was, 109, something like that. Yeah, 109, all the way up to basically almost 159. So almost a $50,000 gain in 1 year. So that was the big thing. I don't really think there's anything else in here that's worth mentioning. Yeah, okay. So let's just move on to holdings. Now, one thing I got to say about Wealthica, one of their best features as far as being an aggregator tool, they basically link up with your brokerage account. So for me, that's Wealthsimple, that's Questrade, and they extract data on a read-only basis. You can't change anything, okay? But one of their best features was unfortunately, they actually had, I think it was like a percentage of total return. So you would have your price action here, and then you would have your total return percentage, and then income generated off of that one position. But they've changed their pricing around, and now if you want that feature, you got to pay like $20 a month. So right now, all you're really looking at is just the price return of every single position. So let's actually kind of just go through that. Let's go through the best performers so far of 2023. And this really shouldn't be a shock. It's HTAE, which I know we're not supposed to play favorites. We're supposed to keep our emotions out of it. We don't have favorite stocks. We don't have favorite ETFs we love, but I'm going to break that cardinal rule on this one. I think HTAE really has become a favorite of mine, I would say. HYLD has always had a soft spot for HYLD, even when I've trimmed the position down. From being 100% of my TFSA down to basically 10%, but I ended up changing out XYLD this year into HYLD.U that you see here, which is in my RRSP, or my wife's spousal RRSP. And you can see obviously the value of that. That makes up about 43%. Yeah, okay, it's right here. 43% of both portfolios combined. So 43% is in HYLD.U. In 2024, I look at possibly trimming again this side down. 2023, I was focused on the TFSA. 2024, I'm going to be focused on the RRSP. I'm not going to change anything unless the right funds come my way. I want to keep that account in USD. There's really nothing at the moment that I'm particularly all that interested in. I'll just keep it in HYLD since it's well diversified. Let's look at some of these other performers. HYLD, you can see here, I bought that at 1180 back in 2022. It was maybe early November of 2022, or maybe late October. You can see HYLD.U has been performing admirably. And just so you guys know, I consider myself, as far as income investing is concerned, I do put a lot of emphasis on price stability and maybe a little bit of appreciation over time. So that is a factor in how I invest in these funds. I do want these funds to at least stay stable, and if I can help it, grow over time while still collecting between a 10 to maybe 12% yield on that as well. Okay, so HYLD is diversified across the US. HTAE just focused on 20 individual tech stocks, so tech focused. My portfolio is really like maybe 50%, 50 to 60% all in one, so ETFs that invest in other ETFs. And then I have a bunch of sector funds just to help boost the yield. A lot of those sector funds, now if you build a portfolio off of just sector funds, in my opinion, you will get a higher yield off of that, but the all-in-ones simply just offer up just massive diversification amongst the fund managers and also the funds that they hold inside. So for right now, HYLD and HDIV are fairly well diversified across other fund managers, but they are looking at building out in 2024. Something I'm looking forward to is building out more products that they can replace those third-party funds with. So it will drive up yield and it will lower fees, which of course mean better returns for us investors. So once again, HYLD heading into 2024 will be one of the more exciting funds to follow in that regard. Next up, we got HDIV, just solid. And HDIV invests in a bunch of harvest funds. What else do we got? Oh, the rock steady BMAX, the yield king of BMAX. No, it's BMAX is I think for most income investors, this one's pretty boring. The yield won't excite you. I think it's here in 2023, it just popped above 10%. It never quite hit 11. It's got something like 33% leverage. So it's of all the major Canadian CoveredCall ETFs here in Canada, it has the highest leverage at 33%. And it's, again, just like HDIV, its underlying consists of like global utilities, technology, financials, of course. But BMAX, even when the market was down, BMAX kind of just stayed in the middle. It's not the highest performer, but it's also never, in my opinion, it's not going to be an anchor either. It's just totally steady. I like BMAX, and also its underlying have been paying out for years consistently, the same dividend, if not grown a little bit over time, but they're just steady with their underlying ETFs. Okay, so then next up we get into call. I bought this a few months ago, and I think at one point it was down like 18%. I'm taking up more of a position in call as my portfolio, I would say over the next year to year and a half, will start to change once I max out my TFSA, but I'll get to that once we start looking at the passive tab. ENCL, I recently swapped that out from ENCC to ENCL. I mean, there's tons of stuff in my portfolio that's leveraged, so it was just a no-brainer move for me. HTAE, HYLD, all of these funds minus BMAX, minus call, UMAX no, but BKCL, USCL, they're all leveraged, and it was just more of an income play more than anything. I don't think oil is going to really, whether it moves a little bit higher, a little bit lower. I've made this point before. Oil has pretty much averaged the same cost over the last 20 years. And no doubt, I'm sure there will be supply shocks and it'll boost the value over time for short bursts. UMAX utilities across Canada. I wouldn't say that there are just absolutely amazing utility funds, but to me, UMAX is probably the best one for its yield, for its AUM, but it's slowly drawing down its distribution. Very small. I gotta say, it's probably, I can't quite remember the exact number. It's maybe under 3%, maybe, or at least under 5% since its launch, that it has its distribution has dropped over since inception. Okay, then we got BKCL. It looks at the big six banks here in Canada, and we can see a performance of minus 1.4%. USCL, kind of the S&P 500, down 1.71%. Again, I'll probably keep this and HTAE. I want to say that I ended up selling off CNCL just to be more sector specific within Canada. For those, I don't necessarily need an index CoveredCall ETF that tracks all that stuff. I can do that, I think, efficiently enough with the sector ones, or at least the sectors I'm interested in, which are financials, which are utilities, and energy. Okay, and then the fourth sector fund is technology. So those are, in my opinion, those are the big four. So my lowest fund is just HMAX, and again, it's financial. It's basically, I'm working on a 12% weighting between 4% HMAX in my TFSA specifically. So 4% HMAX, 4% BKCL, and I'm working on call, which is going to be 4%. So ignore this here. That's of course 1.74% of combined portfolios, 4% within my TFSA. Now, something you guys are probably used to seeing, which is very handy within Wealthica, is income. So you can see, and I'll just show you guys this year, even though I post it in those weekly performance posts, you can see that income generated in September was $14.46, $14.71 in October, $14.95 in November, and then a big jump to $15.48. I suspect for January, I'll probably be, I'm hoping I eclipse 1600. That might be wishful thinking, but I think I'll be close. So that's my prediction for my own distribution total to start 2024. So we can see total amount paid out over the course of 2023. I think there's some funds here that I've traded off. So HYLD, done well for me. It's paid out plenty. You can say CNCL paid out $257. I no longer hold that. XYLD, so this paid out $3,755 in 2023. And I swapped that out entirely with HYLD.U, which actually at the time when I bought it had XYLD in it, just more diversification. And I wasn't too thrilled with the variable distribution. It is something to expect, but I do want as much stable distributions as I can help myself to. So HYLD.U was, at least in my opinion, the no-brainer to go into for now, and then I'll trim that position down as I see other American covered call ETFs that I really do like. But just at the moment, I don't see anything that I'm particularly interested in. Hopefully we get more sector covered call ETFs, or at least ones that yield above 10%. Okay, so I think there's one more we can check out. Performance. Again, this is something you can find in the weekly posts. There's my portfolio. What an awesome year. Total return wise, 16%. It's not my goal to beat the S&P 500. This strategy is not designed to beat the S&P 500, especially in bull times like we're kind of seeing recently. On a more practical level, it's beating out the Dow Jones. It's beating out the TSX 60. Is just better confirmation for me and something I can share with you guys that this strategy has legitimacy. Now, of course, we'll see over 3 years, 5 years, 10 years, but I can't stress it enough. You're going to see that every single week, what that looks like, okay? Because I'm not necessarily going to do a video on my portfolio every single month, because right now I'm just doing 4 videos a month. That's all I can handle at the moment. I do certainly want to strategize and figure out ways I can do more in 2024, but for now, that's something I'm just going to stick to. So that's it for Wealthica. Okay, now we're looking at Passiv, which is, again, a great tool. It's going to streamline, I think, just the weightings you want to have for each position in your portfolio. We're going to look at that. So let's go into the TFSA, because that's the more interesting one. So you can see accuracy. So where my targets are set, the breakdown is pretty close. It just means for all the funds that I hold, and again, Passiv extracts info for me from Wealthsimple and Questrade, and on a read-only basis is able to show me exactly where I am with my totals as a percentage. So my target, which you can edit, is at 4%. Right now, BKCL inside my TFSA is actually at 4.3%. BMAX is a little bit of a hair under. My target is 10% with BMAX, so that is something I'll need to buy up when I do have more cash coming in for contribution purposes. I recently, within the last couple of weeks, decided to up. I sold off ZWK, which was another U.S. bank's covered call ETF, but I didn't need 4 sector financial funds. So I decided to put ZWK into call, and I decided that over time, once my TFSA is maxed out, I do want the TFSA to actually become more US focused, and then I'll slowly, very slowly phase out Canadian funds, and then in my non-registered account, it has more to do with tax reasons more than anything. In the non-registered account, I will build those funds up again. So it's just gonna be lofty from TFSA, and I'll slowly transfer that over to the non-registered account. Again, it's just to take advantage of capital gains, eligible dividends, and all the rest of it. So that will be the long-term future, going probably into 2025, definitely into 2026 at that point, I would imagine. Here, ENCL, of course, I traded out ENCC for ENCL, same underlying just with 25% leverage. HDIV, I like that at 10%. Basically, all the all-in-ones get a 10% allocation. HMAX, 4% because I'm doing financials at 12%. HTA is definitely the biggest portion at 15%. This has more to do with the growth potential of tech over time. So I think, again, in the long run, I'll probably bump this up to probably a 20% allocation inside the TFSA. HTA won't be going anywhere. That's not something I'm going to put in the non-registered account. Again, sector fund, UMAX, I mean, if there is just simply a better utility fund out there, then sure, I'd look at possibly trading that out, just because I'm also on a dollar basis. I'm actually pretty heavy in Hamilton. They're by far and away the fund manager that has most of my dollars for now. I'm okay with UMAX. Again, slight distribution cuts, but that's something that we got to be simply just par for the course with CoveredCall ETFs. And then USCL, I actually jacked this up from 10% to 13%. Again, that was more of a long-term move. Eventually transition more into USCL probably over time. Maybe 20% again down the road. Probably don't hold me to that. That's still a long ways away. But for now, just happy with 13. I'll probably put more money into things like call and all the other funds that are kind of lagging behind just a little bit. So for now, it's I won't be putting in anymore unless I dip below 13%. All right, guys, that's it for this video. I know it kind of went on a little longer than I usually do, but I just wanted to do this kind of year-end full portfolio 360 review, unveil, whatever you want to call it. And also, by the way, stay tuned for January 1st. I got a great video coming out on that day. I think will be a game changer for you guys. I'm going to be launching my first digital product, something I'm very excited for, something I've been working on for the last little while. To give you, I won't give you the name just quite yet, but what it is it's going to be, I'll just say it's going to be an ever-evolving product on a very regular basis to give you consolidated info that will help you make more informed income investing decisions. So that's it for this video. It's gone on too long. Merry Christmas, and I will see you all on January 1st.